Hello students, welcome back. This is Dr. Mercado speaking. I hope all of you are doing great. This is Accounting 1304, Introduction to Accounting 2, and this week we begin covering Chapter 16, which deals with accounting for accounts receivable. Now, accounts receivable is super important for every business. This is basically when businesses either provide a service or sell a product on account. Okay. Now, whenever that happens, there's a risk of businesses or individuals not paying you. Okay, so we have to be aware of that. Some businesses and individuals are either unwilling or unable to pay. Thus, we are stuck with an accounts receivable in our books that needs to be cleared at as of a certain point in time. You know what? If it's been sitting in your books for 200 days, you've tried collecting for it and there's no answer. The business went under. You can't get a hold of the individual. Decisions need to be made because you can't carry this receivable on your books forever. Okay, you need to clear them out. Okay. So, there are basically two methods of accounting for uncollectible accounts. That includes the allowance method and the direct write-off method. Those are the two methods that we're going to be focusing on in this particular chapter. Okay, accounts receivable is super important. That is why it's super important that whenever you have a new accounts receivable in your books, you start collecting immediately. You try to make sure that you establish communication with either the business or the individual to make sure that you collect as soon as possible. The sooner you collect, the better. The longer it takes, the higher the probability is that you're not going to be able to collect that receivable. Okay, I used to do collections, worked in the collections department, and it is a very difficult job to try to collect money from people, especially if the service or the product has already been used or consumed. So accounts receivable is something that a lot of businesses need to monitor, and they need to ensure that whoever they are giving the opportunity for them to purchase on account are able to pay. Okay, now before you begin working on any of your homework problems or your quiz, please make sure that you do read the chapter. There's a lot of great information included. That way you are familiar with the content before you begin attempting the assignment. Okay, if you just dive into problem solving, you're going to be lost. Okay, I can guarantee you that. So I highly encourage students to read the chapter, review the PowerPoint, listen to my lectures, and then begin working on your assignments. Please try to work on your assignments during the week, Monday through Friday. That way, if you have any questions, you can reach out to me. I don't guarantee that I will respond to inquiries received over the weekend. That is why I encourage students to prioritize or organize their time. That way, they can get their assignments done during the week. Okay, so let me get started with the first problem that I'm going to cover. It's exercise 16-4. This problem deals with the collection of accounts written off using the allowance method. Okay, it says Julia Alvarez, owner of Alvarez Rentals, uses the allowance method in accounting for uncollectible accounts. We have to record the following transactions in a general journal form. Okay, and then we are giving 3 transactions. Okay, now before we begin, I copied this information. This is coming straight out of your ebook. Okay, so that way you don't say, well, Dr. Mercado is making things up. Everything is in your book. Okay, so you just have to go back and refer to it and find the information. So there's a section that talks about the allowance method, and from a student's perspective, when I'm working a problem, I like to go back and review the information for the specific section that is covered. So in this case, we're talking about allowance method. I went into the book and I located the allowance method section. Okay, so in the allowance method section, it explains that bad debt expense is an expense from failure to collect an accounts receivable. The allowance method is a technique that attempts to recognize bad debt expense in the same period that the related credit sales are made. This method is consistent with the matching principle, which states that expenses should be matched with the revenues they helped to produce. Okay? Under the accrual basis of accounting, the allowance method is generally required for financial reporting purposes. Okay? There are 3 steps in the allowance method, okay, and I copied the 3 steps for you. Step number 1 is at the end of each accounting period, the amount of bad debt expense or uncollectible accounts is estimated. And this is estimated to the best of their ability based either on history, on trend, or whatever is it that the company wants to figure it out on. But an estimate is made. Okay. Step 2, An adjusting entry is made to recognize the bad debt expense and reduce the reported receivables for the amount of estimated uncollectible accounts. And then step 3, in a subsequent period when a specific account is identified as uncollectible, an entry is made to write off the account and reduce the balance in the allowance for doubtful accounts. Okay, so make sure that you do go back and you read. There's illustrations, there's examples, okay, provided. So what are we going to do? The first thing that happened was on July the 7th, okay? So it says, we wrote off $5,350 owed by Randy Dalzell, who has no assets, okay? So we came to the assumption that, you know what, Randy is not going to pay us. The receivable has been in our books for a long period of time. We contacted Randy. He's not picking up. We can't get a hold of him. He has no assets. So we are going to have to take this as a loss, okay? So we are going to write off the $5,350 using the allowance method. Whenever we write off using the allowance method, we're going to go ahead and we're going to debit the allowance for doubtful accounts, okay? That is the account that needs to be debited, and the amount that's going to be written off is $5,350, okay? Now, what are we doing when we write off an account? What we're basically doing is we're clearing the accounts receivable, okay? So remember, an accounts receivable is an asset account. The normal balance of an asset account is a debit, okay? So right now I am holding a debit on my accounts receivable for Randy Dalzell, okay? So let me just maybe do here a T account for Randy. That way we can visualize it, okay? Because I need to see it. I don't know about you, but I'm just going to improvise here. So I'm going to do here accounts receivable for Randy. Okay. So what happens? Randy has currently, how much is the amount? $5,350. This is the balance that we have sitting in my account, in my accounts receivable for Randy, okay? $5,350, okay? What that tells my financial statement users is that I expect to collect $5,350 from Randy, okay? Well, that ain't gonna happen, okay? Randy's broke. We can't get a hold of him. We're not gonna collect, okay? But we need to clear this receivable because it's been sitting in our books for 300 days, okay? It's been a long time. Randy is not gonna pay us. So if I need to clear this receivable off of my books, what do I need to do? If I need to zero it out, well, you need to do the opposite. Excuse me, okay? I'm going to go ahead and I'm going to debit. This is the adjustment. I'm going to go ahead and I'm going to go ahead and credit my accounts receivable for $5,350. And then that's going to give me a balance of 0. Okay, I'm clearing out my receivable. So this is the adjustment that I'm doing right here. I'm going to credit my accounts receivable for $5,350. That way my accounts receivable for Randy gets zeroed out. That way I show Randy no longer owes me any money. Okay, so I'm going to go ahead and I'm going to credit my accounts receivable for Randy Dalzell. So I'm writing off the account. Whenever we write off using the allowance method, we will always debit the allowance for doubtful accounts, okay, for the amount of the write-off, and we're going to credit the receivable account for that particular customer, okay? I'm going to put here, I'm going to write off uncollectible account, okay? Now, on August the 12th, okay, it says you wrote off $2,870 owed by Jason Flint, who declared bankruptcy, okay? So let me copy this down here. Now I've got an accounts receivable, but this time it's for Jason Flint, okay? Okay, my balance for Jason is $2,870. Okay, so I've got a balance of $2,870. Jason declared bankruptcy. He has no money to pay us. I have to write it off, okay? I'm not going to collect the money from Jason, okay? Once again, I'm going to go ahead and I'm going to debit my allowance for doubtful accounts. The amount of the transaction is $28.70. Okay, and I'm going to go ahead and I'm going to credit my accounts receivable. And this is for Jason Flint. Okay, so by me crediting the $28.70 here, okay, my balance for the accounts receivable for Jason Flint will be zero. Okay, so these are the adjustments that I'm making. I'm zeroing out my receivable for these customers that are not going to pay us. Okay, so this is the same description. I'm gonna write off the uncollectible account. We're not collecting for it. Okay, that happened on the 12th. Okay, so we already zeroed out those two accounts receivable. Then in September the 27th, it says we have to reinstate the account for Randy Dalzell, which had been written off on July 7th and received $5,350 cash in full settlement. So what happened here? Well, a couple of months passed by, and guess what? We received a check in the mail from Brandy. Hallelujah. Okay, Randy remembered that they owed us some money, and they sent us a check. But if you recall, on July the 7th, we had already written off that account for Randy. So in my books, Randy owes me nothing. Okay, Randy owes me nothing because I had written it off already. Well, now that I got the check in the mail, I need to reinstate his account. Okay, I need to reinstate the account. That way I can go ahead and account for an actual payment received. Okay, so what happens? What we're going to do first is reinstate the account. And how do we reinstate the account? We do the opposite of what we did on July the 7th. Okay, we have to reverse it out. Okay, so I have to do the opposite. Okay, so what did I do here? I credited my accounts receivable. So now that means I'm going to debit my accounts receivable. This is for Randy Dalzell, and the amount was $53.50. And I'm going to go ahead and I'm going to credit my allowance for doubtful accounts. I'm putting the money back. Okay, $53.50. Okay, so what I did here is, okay, now I went ahead and I debited my accounts receivable $53.50. Okay. Okay, so I have a debit and a credit. Those cancel out. Now I have another debit of $53.50. That is where we reinstate the account. Okay, we reinstated the account $53.50. Okay, now that is the first step. We need to reinstate the account, put it back in our books. Okay, now I've put my receivables back in the books. Now it shows that Randy owes me $53.50. Okay, my allowance account has been recorded. So basically the debit and the credit offset each other. So that shows that no write-off was done. Now we received cash, probably a check or something. Okay, so now we received payment. Now this entry here is to reinstated accounts receivable for Randy Dalzell. Okay, then on that same day, on September the 27th, I'm going to go ahead and I'm going to record the actual payment being received. So what did we receive? We received cash. How much? Of $53.50. Okay, so cash was received by the customer. We received a cash settlement. Okay, cash was received. Okay, and then I'm going to go ahead and I'm going to clear my accounts receivable for Randy Dalzell. Okay. Okay. So what I'm doing here, this is the actual collection on account. Okay. So what happens here is this entry is to record the actual cash received. Okay. So we received cash of $53.50, and I'm going to apply that cash towards my accounts receivable balance for Randy. So I'm going to go ahead and I'm going to credit this. This is for the actual payment. Okay. So once again, the account is at zero balance. Okay, so the first entry was, this is what he owed us. We wrote it off, and then here we reinstated, and then this is the payment that we received. Okay, and at the end of the day, Randy's accounts receivable has been cleared. Okay, so Remember, whenever you reinstate an account because a payment has been received, either full payment or partial payment, whatever the case might be, you have to do two entries. One of them is to reinstate the account, and the second one is to record the actual payment. Okay. Anytime you write off an account that is deemed uncollectible using the allowance method, you will debit the allowance for doubtful accounts, and then you're going to credit the accounts receivable that corresponds with that customer. Okay, so that is basically the entries that need to happen. This is exercise 16.4. Please refer to your textbook, read the content. Very important information is provided. And if you have any questions, do not hesitate to reach out to me. Please send me the problem number that you're working and your attempted solution step by step so I can be able to provide guidance as needed. Okay, so that is basically it for this lecture. I will have an additional lecture. Please go and listen to it in Blackboard. And I hope all of you have a wonderful rest of your week. Take care. Bye bye.